Hey everyone, my name is Justin. I'm a position swing trader, anywhere from a month to 6 months. This video is the market tone, and we'll break down the NAS, the SPY, the IWM, along with the focus list of stocks I like for this upcoming week. So first we'll start with the weekly chart of the Russell, and we've been forming a range for ever since March. So that is the larger term range that has been built, but if we dive into the daily time frame, we could get more of a detailed analysis. And from the past week, it's just been very tight price action. Monday was the 9th, and we had just not much of a large range at all. It shows me that as long as we continue to form higher lows, if we can hold above the 224 spot, which would show us that we're more in the 50% plus the higher area of the range, that leads us to more of a bullish scenario. But either way, until we get out of this range that's built from 207 to 234, there isn't a great trade on the Russell. Next, let's hop in the NAS, start with the weekly, and a very nice confirmed uptrend. We kind of have a little bit of an ascending triangle building over the past 4 or 5 weeks. Let's hop into the daily. In the daily, let's check out that. So on the 9th, we held the 15-100, that back test, and we closed higher. But then the next few days, we definitely struggled a bit, retesting 1500 multiple times, but proving that we will hold that level. It's nice to see levels be retested and hold. It shows strength. But Friday, we did make that move over 15-100 with more of a stronger close. What I'm looking for is how we act at 15-100 this week. And if we do test the 15-185 highs, I really do expect more of a failed breakout type of price action. But any close above 15-200, that would signify the bulls are here and they're ready to stay. But we gotta make sure that we do hold the big 15,000 level. That is a huge level. Below there, we could see 14,900, and below 14,900, 14,800. Let's hop into SPX weekly. Confirmed uptrend, very strong trend. You see, I'll break down how you can take trades. You look for longer term trend lines to be built. All of these red ovals that are highlighting entries, your entries aren't always going to work. In baseball, you only need above a 3 batting average to be good, and anywhere above a 35 to be great. So trading is very similar. You must realize that there's going to be a lot of losses, a lot of incorrect trades. But if you let those winners run, you use strategic processes to scale out and take profits while raising your stop loss and mitigating risk, this game can provide to be a substantial income, and it's a very scalable game. So let's hop into the daily 1 second. The weekly, we're just climbing higher, and the SPY seems to have a bit more momentum than the NASDAQ just in the past week or so. Let's hop into the daily. And ever since last week, definitely the SPX has taken the momentum leadership compared to the NASDAQ, which they kind of fluctuate back and forth who is stronger. We had some tight inside days, and then we began to break higher. On the 11th, which was Wednesday, we had a bullish close around that 44.50 spot. And then Thursday, a very nice move up to 44.60. I'm very interested. How do we act at 44.70, 44.75 zone? I wouldn't be surprised at all to see us fail breakout and come back, retest, hold 44.50 before we do make another attempt at that high. The way the markets work, for the most part, the breakouts usually fail their first, second, even their third attempt. But once you see that attempt has been failed multiple times, that's when it becomes more of an attractive breakout point. But the first, the second attempts, there's nothing wrong with taking some shorts off of those areas, because that's usually when retail and unexperienced traders are chasing, following, and emotionally reacting to the new highs being built. Now, I think as long as we hold the 4400 on SPX, we shouldn't be seeing much downside. Below 4400, if we do crack that key level, this gap right here that's around 43.25, if we lose that 4300 spot, we have room all the way down to this prior range that was built around the past few months. So below 43, we see 42. I like to use the whole numbers because they will always serve as important levels. Using the daily closes of candles, the big areas intraday using a 4-hour or an hourly chart, and then those whole numbers. It's always a confluence of ideas that will provide the best resources. So now let's break into the focus list for a quick analysis. It's only 10 to 15 stocks. You don't want to have too large of a focus list, because then it's not a focus list, it's more of a bucket. And I do have a bucket, but I'm going to show you the best, my favorite ideas, not my whole bucket. We'll always start with the weekly because it's just important to get that larger context before we dive into the daily. And even the monthly at times is very amazing. So you see Apple, we got 1, 2, 3, 4, 5 or 6 weeks tight. We're approaching that 150 level. We had a huge breakout of this trend line, and boy, this was a nice trade. It ran much longer than I expected, but using that trailing stop loss and scaling out a bit into strength, you can really take advantage of strong moves. So let's break into the daily now. And on the daily, look at that nice day on the 12th. That was Thursday. Very strong day. Pretty good volume. What was that? Around 77 million? Not bad. So you could take entries in multiple ways. You could buy breakouts, or you could wait for the breakout to retest that area as a pop out of the box move. And the later breakout entry is what I prefer, because you avoid that false breakout by buying on the dip back to the key level. So what I'm really looking for is, do we take out 150 and have a nice volume contraction pattern pull back to the 150 area? That would be very ideal. Dash. We'll stick to the daily for the focus list because they're very actionable setups. Dash, look at that volume. We retested the key area of 180, and Dash did not want to be down there. So we ran back up, closing right at the top of the range. I'm interested to see, you can't really chase a move like this. If you get the nice entry down here, risking off the lows, props to you. But for me, I'd like to just see a few inside days, low volume, and maybe take an entry on a pop out of the box, or if it offers a nice low risk breakout day, I'd be willing to take that as well. D-Dog, look at that nice gap. So in a market that hasn't been amazing with too many recent breakouts, it's important to notice these gaps. And I believe this was an earnings gap, but you don't want to be gambling on earnings, rather reacting to the responses of earnings. And D-Dog, we broke this mini 5-day trend where volume is increasing massively. It just shows there's a lot of big money interest in the stock. I would like to see a tight range be built. Let's see how we react to this all-time high at 137.5. We want to see some lower volume consolidation. Dollar General, this is on my focus because it's been a winning position for me. I took my entry, if you check out that major trend line, I saw the pop out of the box move. I took my entry on the 22nd, risking off the low a day, a little bit under the low a day. Now you don't want to be too predictable with your stops, so be a little different. If you're risking low a day, give it a little extra room. And try to never have your stops at like the 50 cent, the 75 cent, the dollar. Make them random numbers. You don't want to be that average stop loss, because then you're just going to get stopped out. So just really riding the trend, trailing the stop, and that's about it on Dollar General. Disney looks pretty good for one of those pop out of the box retest of a longer term trend line. So enough said there. Docs, big momentum. Let's see if we continue to get tight. And this stock it could go to the moon truly. When you see some days like that, let's see how the next couple of days react. But if we don't give up this 69 low and continue to form a high tight flag, boy, that looks good for continuation. Figs, look at the volume. That gets me excited, truly. You got way more volume than the past couple weeks, 5 mil, but the range is huge. So let's see how it acts. It's not really super actionable, but if it tightens up, we don't want to miss it. FRHC, check out that higher lows continuously being formed. A nice ascending triangle. This stock, you could take a low risk entry maybe Tuesday, Wednesday if we just sort of climb up, or you could wait for that complete breakout. There's so many different ways to take trades. So figure out what you're most comfortable with and run with that. Open. We had a huge downward trend, and this kind of emphasizes the stage 1, 2, 3, and 4 of how markets move. Right here, this was more of a stage 4, a downtrend. And now we're going back into the stage 1 where we consolidate, we're not making lows anymore, and we might be going into a stage 2 uptrend in the near future. So keep your eye on open. PFE, this is another position for me. I got in on this trend line break. Early in the day, I believe you never want to chase breakouts. That's one of the hardest parts about trading. Breakouts are awesome, but they're easy to get faked out in. So have rules for your entries. For me, I refuse to take an entry if we're anywhere more than 3% extended from the pivot. And I believe I took my entry around 40.75, around that area. But man, what a nice trend. And there's no need to cut your winners short. Let your winners ride and try to maximize that trade, because trends can go much longer than the average person assumes. So ride those trends. PLCE. Over this 105 spot, let's see if we continue to tighten up. It has resistance, so note that, but some very good potential. SQ I love on the pop out of the box setup. I really enjoy this setup because it takes a lot of the risk out of your entry. You can get lower risk, tighter stops, and you don't want a position size too large, even if you have a lower risk entry, but you also don't want to be risking 5% on every trade. So if there's an opportunity where you can risk 1 to 2%, sometimes it's really worth it to take those lower risk entries. SYNA. This one is forming a nice high tight flag. Ideally, we want to see it continue to consolidate for a bit longer, but don't miss that one. Task. This reminds me of FIGs a lot. And look at that high volume day. Massive volume. Volume is just one of those indicators that lets you know you're not alone, and you don't want to be with the masses, but you do want big money behind you. So that's kind of what Task is telling me, and we continue to hold the key new highs while we consolidate. Let's see if the range tightens up and we could get a nice breakout move on that, or pop out of the box. Team, very similar, high tight flag. Let's see what happens, but don't sleep on that ticker. TGH, last stock. Getting that pop out of the box setup. We broke through that 35 key area, and now we're retesting. So that's my focus list and market tone. We're in a confirmed uptrend. I'm expecting nothing but new highs to be made, but don't be chasing breakouts when it's the first or second attempt. Really, they fail more often than not, and avoid doing what everyone else is doing. So if you enjoyed anything, drop me a like or a comment. I'm always here and interested to listen to constructive criticism or tips, anything. Thank you, enjoy your day, and I hope you learned something.